Hey, so my name is Rachel Worsham, and I am a post-secondary access advisor with the Emily K Center's Game Plan College team. This is our third of many webinars. So hopefully you've seen our schedule. If you go to bit.ly/GPC virtual, you'll be able to see a full schedule of all of our webinars. So I'm going to go ahead and let my colleagues introduce themselves.
Hello, everyone. My name is Christina Villegas. I'm also a post-secondary access advisor, and I will be here joining Ms. Rachel with this presentation on financial aid today.
Hi, my name is Dwayne Camp. I also work with the Game Plan College team, and I'm just listening in.
Hi, everyone. My name is Ms. Jackie, and I'm one of the post-secondary access advisors.
All right, so I'm going to go ahead and share my screen with you all. Oops. Okay. Can everybody see that? All right. So today we're going to talk a little bit about what you will see on your financial aid award letter. So if you're a senior and you've applied to college and filed your FAFSA, you probably have gotten something back from colleges with a bunch of numbers and words on it, and you might be like, oh, I don't know what any of this means. So we're going to talk through that today. If you're not a senior, this is still really useful information for you. So when you're going into your senior year and you start to see these terms on financial aid websites, that you know what they're talking about. Oops. Okay, so I just want to start by talking a little bit about the different types of financial aid. So there are two types. There is a need-based aid, which is in front of you, and then non-need-based aid, which I'll get to in a second. So need-based aid is financial aid from schools, so money that schools or the government or the state gives you that is based on your income. So when you file the free application for federal student aid, you had to put down all of your family's earnings, any houses or properties that your parents own. All of that is used to calculate how much the government and a school needs to give you so that you'll be able to afford college. So there are four types of need-based aid. There are grants. So there are federal grants that come from the government, state grants from the state, and institutional grants from the college. So grants are money that you do not have to pay back. So essentially it's free money. They say, hey, here's a Pell Grant, here's $5,800 to go spend on your education. There's also federal work study. So essentially, this is financial aid that you get by working. So on your award letter, a college may say you will earn $3,000 this year in work study. You can do that through a position on campus. So you could work in the school bookstore or the dining hall. It could be an on-campus community service job or off-campus community service job. So it really just depends on how your college structures federal work study, and it depends on each college. So wherever you decide to attend, if you do choose to do work study, they will shepherd you through that process. So the next type of need-based aid is scholarships. So this is kind of similar to a grant in that it's typically money, well, it's always money that you don't have to pay back, but there may be some sort of stipulation. So you can get scholarships from local organizations, regional statewide organizations, or national organizations. So an example of a local scholarship could be the Lions Club or your local Rotary Club. So they may say, congratulations, you applied for this scholarship, here's this money. We gave it to you because we see that you cannot pay for college without this money, but we want to see that you maintain a certain GPA. So some scholarships have stipulations attached to them. So when you're applying to scholarships and you're accepting scholarships, make sure you pay attention to that, especially if it's renewable. So For instance, they may say, we want to see your transcript at the end of the year for you to get this money next year. So make sure you're paying attention to that. And then finally, there are loans. So when you file your FAFSA, if you meet a certain income qualification, so if you're within a certain distance of the poverty threshold, depending on how many people are in your house, you could be offered a federal direct subsidized loan. These loans do not accrue interest while you're in college. So basically that means if you take out $2,000 your freshman year, when you graduate, that loan amount will still remain $2,000. Sometimes, and actually all the time, except in this case, loans start to accrue interest the longer you have them out. So if you took out $2,000 your freshman year and it was not subsidized, it would be more than $2,000 a year when you graduate. So the great thing about this direct subsidized loan is that it does not accrue interest. So it means it's less expensive for you. So the next type of aid is non-need-based aid. So this is financial aid given to you based on things other than your family's financial circumstances. So that could be a local scholarship. A lot of scholarships are given to students who are trying to go into a certain career path. So maybe there is a scholarship for people interested in pursuing nursing, or scholarships given to you based on your academic performance. So let's say you were had like a 5.9 GPA. Someone could give you a scholarship for that. There's also non-need-based loans. So whereas before I said that the subsidized loan, you had to be within a certain, around the poverty line as determined by the USDA to get that loan. These loans from the federal government can be given to anyone regardless of how much money your parents make. The difference with these loans is that they are unsubsidized, meaning that they accrue interest while you're in college. So if you take out $2,000 your freshman year, when you graduate and you look at that loan amount, it's going to be more than $2,000 because the bank is charging you a yearly percentage based on that $2,000. So you can get that by filing your FAFSA. There's also federal direct parent plus loans. These are loans that are given to your parents through the federal government. So they take out money to help pay for your college. And then there's private loans that you could take out from, Wells Fargo or Bank of America. We really, really suggest that you try not to take out a private loan because the interest rates on private loans are much higher than the interest rates on federal loans. So that $2,000 in a federal loan is going to be a lot less when you graduate than the $2,000 of a private loan. So when you are looking at your financial aid award letter, you're going to see something at the bottom that says total cost of attendance. So we just kind of wanted to go through what goes into your cost of attendance. So your cost of attendance is fixed cost plus variable cost. So what does that mean? Fixed costs are things that you are going to be charged yearly regardless of your use. So that's going to be room and board and tuition and fees. Variable costs might change depending on what you do. So if you live in a dorm, you're going to be charged, something like $800 a month. If you decide to move off campus, your rent could be reduced to $500 a month. So your variable costs decrease if you make that decision. Let's say that you decide to buy your books on Amazon rather than at the campus bookstore. Your books are going to cost less if you buy them from Amazon. If you have a car and you're driving back and forth from home to school, that's going to cost less than if you have to fly from home to school. So your variable costs are things that might change. When colleges are determining your cost of attendance, they tend to estimate on the higher side. So they tend to say, okay, like let's say these students live on campus this year, they buy the most expensive books, they get the most substantial, most expensive meal plan. So because you can make decisions to reduce your variable costs, the cost of attendance on your award letter likely isn't what you will pay. Another note here is that because of the Affordable Care Act, you are required to have health insurance. If you are not covered under your parents' health insurance policy, the university will charge you, I think it's around like $800 a semester for health insurance. So if you stay on your parents' health insurance plan, that's a way to reduce your variable costs. So when colleges are determining what to put on your award letter, so what types of need-based aid to give you or non-need-based aid, they use this formula. So they'll take their cost of attendance, which we just looked at. Remember, it's a fixed cost plus the variable costs. And they will subtract your expected family contribution. So this is how much money the FAFSA determined that your family is able to pay for college. So if you file a FAFSA and your EFC is 0, the FAFSA is saying, we don't believe that the student can contribute any money towards their college education. So they subtract their cost of attendance, the EFC as determined by your FAFSA, and that determines your financial needs. So that determines how much money the college would need to give you in order for you to go. So for example, if cost of attendance is $22,300 and your EFC is $2,200, the college would need to give you, oh, I don't think that math is right. The college would need to give you $20,000 around in order for you to attend that school. While colleges do this calculation, oftentimes there are gaps in award letters. So colleges could say, okay, the student needs $20,000 to go here. We can only give them $5,000. So as you're looking at your award letter, make sure you're looking out for gaps, and Christina will go into that in a minute. So this is just an example of what a financial aid award letter is going to look like. So if you have been looking in your email and you see something like this, this is what you will use to calculate how much you are going to have to pay for college, if any, what gaps there are in institutional and federal financial aid, and maybe where you might need to advocate for yourself to get more money. So just before we talk more about financial aid award letters, I did want to remind you about verification. So when you file your FAFSA, the federal government is required to verify a certain percentage of financial aid applications. So theoretically, they randomly draw financial aid applications and they say, okay, I need to see extra information from you to make sure that all of this information is correct. Colleges and universities do this as well. I'm not so sure how random it is. So if you see an email that says your FAFSA has been selected to undergo verification, make sure that you read it. It's often going to come from your college's financial aid office. If you decide that even if you got a full ride, you would never attend that college, you don't need to bother with verification. But if you do think that that college is somewhere that you might want to attend, read that email, make sure that you can get the documents they're asking for. So they might ask for tax transcripts. They might ask for a letter verifying your home situation. And if you are verified, we can work with you to get those documents and make sure that you are taken care of. If you do not complete verification, you will not get financial aid from that university. And this is what a verification letter would look like. So let's see, your FAFSA has been selected for a process called verification, and then it tells you what you need to do. So please don't ignore this. It's really important that you do this, otherwise you won't have any money for college at that specific university. So I'm going to turn it over to Ms. Christina now to talk about calculating your cost of attendance.
Hello, everyone. So we are going to talk about cost of attendance and calculating your bill. So just to bring this back up, we have fixed costs and variable costs. Fixed costs can also be known as direct costs. So that's what I'm going to be referring to them as. And variable costs are indirect costs. So, you know, they vary, they're not charged to your bill, and direct costs or fixed costs, they are charged to your bill. So that example would be tuition fees and room and board. Here is an example of an award letter. This is from the 2016-2017 year. So this is for Fayetteville State University. The amounts do vary and change from year to year, but they are very similar. But here is the total amount. So I'm going to go and to explain each section in a little bit. But the total amount that this student is getting in financial aid is $11,185. Here we can see the terminology that Ms. Rachel brought up. So we have a federal Pell Grant that the student had an EFC of 0, so they are receiving the max amount of that time, which was $5,815. Now I think it's about $6,197, the max amount for this year. So each year it does increase little by little. This student is also getting a federal state grant, a UNC need-based grant. This is a Bronco scholarship for Fayetteville State. Some campus institutional need-based, I think this is probably a scholarship, and this is either a scholarship or a grant. So all of this money, this $11,185, technically is free money. And since this is all free money, so grants and scholarships, you can see that this is automatically accepted for the students. So this is accepted in the student's account should that student decide to attend Fayetteville State. I had to go dig this up from the internet. So I had to go find Fayetteville State's cost of attendance for that year to then determine how much I'm going to actually get billed. So, so just keep that in mind. So if you do go searching for your schools, if they don't provide you that, just make sure that the years match up. So this is 2016-17, they do match up. You can see the total cost for tuition and fees, loan fees, room and board, supplies, transportation, miscellaneous fees, personal expenses. This total of $16,351 is your cost of attendance. Cost of attendance is not what gets directly billed to your account. Those are your direct costs. So that would be your tuition and fees. For this, for Fayetteville State in this year was $5,455. And room and board, so that together is $8,070 for this year, for a total of $13,525. So that's what this student is going to get billed. And these are estimated, so they still have, there is still a slight chance that these costs are getting solidified for your college for the 2020-2021 school year as of right now. So right now they may have estimates. If they don't have the one available for 2020, just use 19s and know that that is an estimate. So this estimate total for this bill is $13,525. This student's financial aid is $11,185. So we're going to see if this student has a gap. So for $2,340. So that is a negative number, financial aid minus my direct cost or my billed cost. My balance is $2,340. Can y'all hear me? I saw a message that my internet wasn't stable.
We stopped hearing what you were saying right as you said gap. So would you explain that financial aid minus bill again?
Sure. So once you figure out how much financial aid and your direct costs, I created a very quick formula of figuring out what your gap is. How much am I missing in order to be able to afford this school? So I made that formula, financial aid minus your direct costs or your billed amount, estimated bill. For this student, if I do that formula, it is negative $2,340. That's my remaining balance, or that is what I will owe to the school. That is for the full year for Fayetteville State. $2,340 to owe to the school is not that much for the full year in the grand scheme of things. So this student, if you notice, was they received $11,000 of free money. What the student can do is then take out a subsidized loan, the one that's not accruing interest, to cover that gap, or scholarships is a good way to cover that gap. Or a lot of times students have summer jobs and choose to do a summer job and save some money. That could cover that gap. We can also further think of, say we want to pay for this out of pocket. A lot of students feel hesitant and say, no, I do not want to take out loans. Like, my family really doesn't want to do that. What if we make payments on this? And so a lot of students don't know that you can make payment plans on your billed amount for school. And you can and should look into this early and sign up early. So if let's just say that I am the student and I'm going to choose this school. My gap or my bill amount is $2,340, what's here. I will then divide that amount by semester or by semesters, because this is a full amount. Colleges charge per semester. So if I do that divided by 2, that is 1,170 charge per semester. Now, this is why you should look into it early. If you look up payment plans, there are deadlines to sign up for them. But if I want to sign up for this payment plan now, and if you sign up for them early, you can get that divided usually within 5 months, 5 payments. Payment in August, September, October, November, and December. And then for the spring semester, January, February, March, April, May. So 5 semesters if you do it early. So if I divide this amount by 5 months, apologies, 2 semesters, 5 months per semester. So if I divide this amount, the 1,170 by 5 months, my payment comes out to be $234. Let me double check that math. 1,170 divided by 5, $234. So that's a payment of $234 a month. That can be very doable, and a lot of students do choose this route, the payment plan route, to not take out extra loans. So we'll answer any questions for that. I know I went over that. I just want to give you one more example, and if we'll go back to answer any questions you may have. You can put it in the chat. And a big note here is that health insurance is not included here. So Miss Rachel said it was $800 per semester. That was back when we were in school. Now it's up to about, well, actually have the numbers later on. It's about $1,300 per semester. So it has gone up. So health insurance, this is not including health insurance. So that's where the student might consider taking out loans to cover those gaps. Here's another example, UNC Greensboro. UNC Greensboro put everything in place. So I have my financial aid and my cost of attendance in one page. This was mailed out to the student. The expected family contribution was $0 as well. So that means that UNCG was giving them the most aid that they could give. So I'm just going to go quickly over the total amount, which total cost of attendance for this year of 2016 to 17 was $18,802. My total financial aid that this student was receiving was $16,449. And now let's look at our direct costs. So we can't just take this at face value. We have to do direct costs and to see what our bill will be. So that's tuition, fees, room, and board. And so my direct cost totals $15,622. And so if I do my GAP formula that I presented in the last slide, that's financial aid minus the bill. So if I do this, I'm receiving $16,449 in financial aid, and my bill, my direct cost, will be $15,622. So that means that means I get a refund of $827. I put it in green on purpose. That means I'm good. My financial aid is covering my bill. But wait, what is my actual cost for this school? If you look clearly or deeply at this financial aid award that's given, you can see a subsidized loan for $3,500 and an unsubsidized loan for $2,000. So that's a total of $5,500 in loan money. So that's giving me my net cost. Net cost may come up in some of your paperwork. That's your billed amount and your borrowed amount. So what's my bill and what's my money that's borrowed? Here the student is not getting a bill, they're actually getting refunded $827, but that's technically borrowed money because that $827 comes from the surplus amount from the loans that the student is offered. So the student, as you can see, is offered the loans. If this student has no financial support from family at all, I would suggest that they do take the loans. And as you can see, the loans covers their whole bill. And these extra $827, use that for books, use that for personal expenses. Because although that's not billed directly, that is still an expense you will have as a student. So you'll still need shampoo and toothpaste, or you still might, the dining hall might be closed and you need a midnight snack or coffee. Those are your extra variable expenses that won't be billed, but that you will need to cover at some point while you're a college student. And again, health insurance is not included. So health insurance, or to get the health insurance, the one that got the $827 refund back, they would not get a refund. In fact, they would owe money if they needed to get this health insurance from the school.
Christina,
so yes.
You froze again when you started talking about health insurance.
Oh, okay. Sorry about that. My internet's a little wonky at the house. So health insurance, that is not included in this bill amount. It is about $1,350 per semester. So that's about 1,700. Wait, that's not right. 2,700 per year. That was my error in the numbers. The last one too. 2,700 per year. So this student that's getting the refund back of 827, say they needed to take out or use the health insurance offered by the college, they would then owe an amount. So they would not get that refund back, if that makes sense. So a couple other things to consider. Indirect costs, I did mention that. So although food, books, dorm items, and travel and all that, it's not included in your bill, you will need to cover these expenses and they vary per student. Health insurance, we just talked about that. That will be an additional cost if you don't have your own or if you're not on your parents. Work study. So work study was not directly mentioned in these financial aid packages. Sometimes they are mentioned, sometimes it's a separate email that comes later if you're offered. That usually gets paid directly to the student, so that's not going towards your bill. So sometimes colleges will put work study and subtract that from your total cost of your bill amount. That's not how that works, so just keep an eye on that. And enrollment deposits. So there are other costs that will be coming up soon or shortly. So to reserve your seats, either by May 1st or June 1st, you'll have an enrollment deposit anywhere from $100 to $300 and a housing deposit. So anywhere from $100 to $300 as well, you will need to submit a housing deposit for the following year. And that's all I have. I'll switch it back over to Ms. Rachel and we can facilitate questions.
So we've had a few comments or questions in the chat. If you have a question, please feel free to add it. You can find that by hovering over the bottom of your screen and clicking chat. So question is, why do you say you're not sure how random verification is? So while it is supposed to be random, If your EFC is low or zero, it is very likely you're going to be asked to complete verification because you're going to be hopefully getting a lot of money from that college, and they want to make sure that it's going to the right places. So if you log on to your financial aid account and you look at your student aid report, your SAR, and you see that your EFC is zero or close to zero, make sure that you go back and look in your spam or go back through your email and make sure that you haven't heard anything from your financial aid offices. Let's see. So are you able to ask for more aid if the gap is large? Yes, you can always advocate for yourself and ask for more aid. It's going to be a lot more compelling to that school if you've received a large aid amount from another school. So let's say, I don't know, you want to attend Carnegie Mellon and NYU gave you a full ride. That is something you can leverage with Carnegie Mellon and say, you know, they gave me all this money, but I really want to go to your school. I can't afford it. How can you help me? It's going to be harder to make your case if you don't have a large offer from another college, but that's something that we can help you with. So even if you don't have a lot of money from another school, we can help you reach out to colleges and, you know, ask for what you need. Okay, so next question, is health insurance necessary? Most colleges and universities will require you to have some sort of health insurance. I won't say all, but I believe all of the public institutions in North Carolina do. Let's see. Is decision day delayed because of COVID-19? So is the deadline to decide. For some schools, yes. It's really on a case-by-case basis. So that's something you will just have to Google. If it's going to be really difficult for you to pay that deposit right now, and they haven't changed their deadline, make sure that you reach out to someone in admissions or someone in the registrar's office as soon as possible. The sooner you get to them, the better it will be, because I assume they're going to get a lot of requests like this. And if you need help deciding who you need to contact or how to contact them, we can help you with that as well. Okay. For federal loans, do repayments start immediately or not until after graduation? And same question for private loans. So for federal loans, for the unsubsidized loan, for the subsidized loan, it does not begin accruing interest until 6 months after you graduate, but you can start paying on these loans. And GPC team, correct me if I'm wrong, but repayment is not required until after you graduate. Private loans, I'm not sure. It depends on your bank. I would say if you do take out a private loan, you should pay that loan down first. On the slides, you saw that the interest rate for federal loans is around 5%. It is much, much higher for your private loan. So if you're forced to take out a private loan, make sure that if you have extra money, make sure that you're paying those down before you start paying down your federal loans. Something else that we didn't mention is that federal loans have different repayment plans. So they have income-based repayment. So, you know, if I took out a lot of money to go to school, but I am only getting $30,000 a year, the amount that I pay is not going to be the same as someone who's getting paid, you know, $200,000 a year. So one of the reasons that we push federal loans really hard is because you have so many flexible paying opportunities. There's also public service loan forgiveness. Theoretically, if you follow it to a complete T, if you work in a public service job for, I believe it's 10 years consecutively, they will pay down the rest of your loans. However, that paperwork is a bear. And there's been a lot of stories recently coming out about people having to jump through these crazy hurdles. So that is an option. But the income-driven repayment is a really great option. The interest rate on Parent Plus loans is around 7%. Let's see. Okay, that's all the questions that we had posted. If you have any questions, please feel free to add them to the chat. Why do so many people mess up with loans and it has a bad reputation? So, in the US higher ed system, college is expensive and it's getting more expensive every year. So loans have just kind of become a part of the landscape of higher education in the US. I will say that the people that are most likely to default on their loans, so the people who are most likely to not be able to pay their loans, are people who took out a loan to start a degree and never finished. So, and then on the flip side, the people with the most loan amounts are the ones who have those graduate and professional degrees who are making enough money to pay off their loans. So loans have a bad reputation. However, because of all of the different payment plans with federal loans, while it isn't fun to pay off loans, it is manageable. You just have to make decisions for yourself on how you want to finance college. When you see news stories about people taking out $200,000 for their undergraduate degree, those people are taking out private loans. You cannot take out $200,000 in federal loans. So a lot of the problems with paying back your loans are through those private loans, which is why we strongly suggest that you don't take them out. Okay, so the next question is, for payment plans through the college, is it college specific as to whether there are fees, interest, payment schedule? I'm guessing it's best to just reach out to the school to find out. Would you agree? Yes. So we can give you like a general overview, but it's just best to reach out to those financial aid offices. Typically with payment plans for your tuition, I don't believe they're going to charge you interest or fees. They just divide. Christina, do you have something?
So you can look this up now. So whatever, like ex-college payment plan, and look those up and find something for this upcoming year. Sometimes they do charge fees, but usually they do not. So sometimes it might be like a $25 payment plan registration fee, but that just depends per school. So I would definitely do your research first, and usually they do have some kind of links or some kind of like PDF that has all the instructions on how to sign up. And then if you have questions, reach out to financial aid.
So the next question, if the gap is too big and you still cannot afford that college, what is your best shot / plan B? That really depends on you. So if the gap is really large, like 50 grand a year, you're going to have to decide whether it is, based on what you plan on going into, is it going to be financially feasible for you to have 50 grand out a year in private loans? You also have to think about other options. So is there a cheaper college that you could, at least start at? So you could do the community college to 4-year transfer, which, community college tuition for in-state students is normally completely covered by the Pell Grant. So, looking at cheaper options, transfer options, it really depends on you. That's not something that we can really answer for you. We can just advise you on, maybe what we would do, but, that's a conversation that we could have together. Are there any other questions? I'll just give you a few minutes to type them out. I think Dwayne has something to add.
Okay, thanks for unmuting me. I wanted to say too generally, the interest rates on private loans are much higher than the government loans, and this is on average. The second thing I want to talk about is there's a preference. Ms. Rachel was just talking about a preference for people to take government loans as opposed to private loans. That is true for other reasons too. One thing is there's also loan forgiveness programs with government loans. If you work a certain number of years in a certain niche, you can get much of your loan forgiven. That's one. Also, there is a growing call for loan forgiveness if you follow politics. And so potentially there could be, and I'm not saying this will become policy, but potentially this could create a policy shift with regard to student loan forgiveness. If, for example, there's this policy shift and you have a private loan, the government could not dictate to banks, private banks or institutions to forgive that loan. However, if the policy shift is realized, the government would ultimately forgive your student loan debt to the government. That's the only thing I was adding.
Yeah, and I would, we see all this news about public loan or student loan forgiveness. Make sure that you're paying attention to that, but still borrow as if nothing will change. And let's hope things change, but don't make your decisions based on something that might happen if someone is elected, because we don't know what's going to happen. But like Dwayne said, if there is loan forgiveness, it's not going to be for your private loans at those banks, because the banks are there to make money. Are there any other questions? So if you have any, okay. If I don't have enough with federal aid, scholarships, and parent help to pay for tuition, would I need to take out a private loan? Not necessarily. It depends on how big the gap is. If the gap is $2,000 and you think if you worked part-time over the summer or part-time over the school year, you would be able to pay for that yourself. If your parent, you said parent help to pay for tuition, there's also, if that's not including the Parent Plus loan, that's something that they can consider. I would say your private loan should be the last resort. But that is something that we could talk through with you once we saw your award letter. So if you all would like individual counseling on those award letters, you can make an appointment with us. You can go to our website, gameplancollege.org, and set up a virtual advising session. We can look through that with you and talk about some options.
And I'd like to add, this is where scholarships can fill the gaps as well. So I have a lot of students that are first year college students now. And so if they were, probably the biggest thing that they learned last year was that they didn't apply to scholarships enough. They thought that their financial aid would be enough. But unless you're applying to a school that explicitly says that they're meeting 100% of financial need, then you can expect to have some loans included in your financial aid package, like we saw with you in Greensboro. So unless the school meets 100% of need, you should definitely apply to scholarships, because you will have some kind of gap.
Did any of you have a Parent Plus loan? I've heard nightmares about it, high origination fee. I did not. Did any of you? In my experience working with students, very few have taken out Parent Plus loans. There is, and this might be research that we can do with you, but I think there is some evidence out there that these loans are quite burdensome on parents just due to the higher interest rate. But what is in the news isn't always reflective of reality, especially around the student loan conversation. So if you would like some help researching exactly, what goes into taking out these Parent Plus loans, we'd be happy to help you kind of sort through all the noise. So if there aren't any other questions, we just wanted to let you know about our feedback form. So I'm going to type a link, or Ms. Christina's going to type a link in the chat box. This is just a feedback form for this session, and we're going to be doing weekly raffles, raffling off a $20 or $25, 20? Okay. A $20 gift card to one winner every week. So if you attend multiple sessions, make sure that you are filling out a evaluation. Like I said earlier, we have lots and lots of virtual information sessions with colleges over Zoom in the next month and a half. We also have workshops every Monday at 10 a.m. and 2 p.m. So please be sure to check out our other workshops that we're offering. Again, if you would like any personalized, counseling on financial aid or other things, please feel free to make an appointment at gameplancollege.org. And we will hold those over Google Hangouts or over the phone. Thank you guys so much for coming. We hope to see you soon.